Okay, guys, we're gonna go over now scalping or looking for entries on the NASDAQ, S&P, and the Dow Jones. I'll give you guys a few hints. Right now, I'm looking at the monthly. You always want to look as far back as you possibly can just to see what the market's been up to. So back in the 2020s, we were in an uptrend in the market. The way that you would have played it during this time is all the lower wicks right here is where you would have gone long. Of course, that seems simple. Once it started to reverse right here at the top and it started on a downtrend market, the way you play these is whenever you're on a monthly or the highest time frame or the highest time frame that you can actually find, you short the freaking wicks at the top until it confirms the reversal. Whenever the market's on a trend, you always trade the trend. Do not ever, do not ever, do not ever go against the market. That is how people lose money. That is how people lose accounts, especially if you're going to try to day trade. Do not go against the market. Always trade it in its trend. The trend is your friend. So right now we're actually in a downtrend if you were to look at it completely. The market still hasn't confirmed, is attempting right here at the moment a bounce to come back into this level of support. But even if you look at these top wicks, it's rejecting it. So exactly what I'm saying, you short the wicks, short the wicks, you short the wicks, all the wicks, you short them, you short them, you short them. Why are you still shorting it here? Even though the market is attempting to bounce, you need confirmation. The trend is still going down on a long time frame. If we were to look at it on a weekly, still going down. I'm sure if we put a trend line down here, the trend line hasn't been broken. Always trade confirmation. Still heading down the market. So tempting right here, like I said, is coming into the support, but you see short the top of the wicks. Top of the wicks on high time frame, short the top of the wicks. This is on the daily, short the top of the wicks, scalp them all the way down. If you start to look at it at a lower time frame, you start to look for entries. When we look at the NASDAQ right here on the 4 hourly chart, remember the level that I had set that we're back into this level. You see that we're trending side to side. So the market right here, what it's actually doing is it's soaking in buyers, which is what I call it, is it wants to create a level of support. It's attempting to bounce. If the market cannot over all these weeks and all these days that it's been trying, if it cannot hold support, it will come right back down into a lower level. It's attempting to come down if you look at it at the 1 hourly, on the 30 minute, on the 5 minute. But if you were to look at it on a 4 hour time frame, it is actually still at support. Right here, it can attempt, this is a dip. I would attempt to go long right here at the moment, people. The reason I would attempt to go long is right now we are at a support level. You can come right here, let it hit resistance. If it hits resistance, you can short it. If it comes down, it needs a lot of volume. It needs bad news or something in order to push this down. You have a higher chance of it going right back up and testing the resistance levels around here, even trying to move a little, half a leg up to the next resistance level where this red line is at, before it actually gets enough volume, or I mean any bad news can tank it to go down. So at the moment when you get this type of action right here, it's usually just this because the market wants to come down, test to see how many buyers it can get before it can come up, and then mess with the shorts again. move it side to side, and then come right back down. You see, it's going to keep doing this trend until it actually finds the direction. But at this level, it wants to scare the longs. It wants to scare the, I'm sorry, yeah, it wants to scare the longs thinking it can go down, and it actually wants to gather to see if anybody wants to short at the bottom. If it gets enough volume and it goes down, then of course, then you can ride a short. But why would you think it's going to go short when you have uh, almost 2 days of support prior to this of holding it at this level? And when you look to the left, whenever you trade the market, always look left to see what the market's going to do. It's holding support, holding support, holding support, and it has a few days of support. It's going to take a lot of volume to move this down. So you want to look for scalp entries at levels whenever you trade the market like the NASDAQ. So these are entry points at the moment. If you want to fine tune your entries, then you start looking down into the 1 hour, mark your levels. Go into the 30 minutes, mark your levels. See, it's trading side to side. Go into the 5 minute and enter. I don't recommend trading the market underneath the 5 minutes. If you guys want to, you can. I only do that on NinjaTrader because I have a 10-second chart and I'm able to see the market move instantaneously. Once you guys develop the skill, by all means, go ahead and do that. I have no problem with that. Let me show you guys the same thing when trading the ES. You want to start out as far back as you can, see the trend, the same thing. Short the wicks when it's trending in that direction. Obviously, when it's trending up, you buy the bottom of the wicks. Keep it simple, guys. Trading is simple, don't complicate it. Come down to the week, follow the trend. It's coming down. Once you learn which direction the market is moving, trade with the market, people. Don't complicate it. Keep it simple. Look at the data, look for the levels. You start to set your levels, start setting your resistance levels and your support levels. Remember, the market looks at it differently. The reason it stays down here a little bit longer is because these are demand zones. It tries to go here until it actually reaches a point where there's too much liquidity and it starts to reverse. But at the moment, you see it reaches that support level and it starts to bounce up. Let's look at the back at the 4-hourly, set your levels. It's bouncing. The same thing, the same way. The market, this is confirmation, exactly the same thing that the NASDAQ is doing. The market at the moment is attempting to bounce. It's holding this level right here. It's reached this level that I've had set for a few weeks now, and it's holding it. It toggles back and forth. It goes right beneath it, and it goes over. One more thing that I forgot to mention, which is this red line and this blue line. Whenever you're trading the market, the two indicators that I recommend using is just the 200 and the 50. The market loves to play with those. If the market is above the 200 and the 50, we are on an uptrend for the day. If it is below, most likely we are short for the day. Those two indicators are very important. They work greatly on the 15 and on the 30 and on the 1 hourly. If you guys are going to be looking at the smaller time frames, 5 minutes, 1 minute, 10 minutes, 15 minutes, and you want to scalp and you want to enter, the market loves to follow the 90 EMA. So that's when I recommend you using it. It tightly follows it. When it's above the 9 EMA, it's going to confirm to you that it's actually in an uptrend. So you can actually just keep following that uptrend, especially if it has volume. When it's below the 9 EMA, it's actually confirming to you that it's below, and you might as well just short that or short pops. Keep an eye on it. You will get to the level where you just no longer use the EMAs. You mostly see it as levels and demand zones. The EMAs just really become confirmation that the market is actually in an uptrend. It's going to take a lot of volume to push this down and actually hold down here below this level. So the only way that's going to happen is if we get bad news, guys. If we get any good news this week on the FOMC meeting, this shit is going up. Like all this support, this market is going up. And this will become another level. If we get bad news, then obviously you know where the levels are at. The same thing on the SPY. This is SPX. This is the ES. It's the same thing. You want to do the same thing. Go on a lower time frame, find the levels side to side. When you look at the lower time frames, it looks harder to get into. When you look at a higher time frames, it becomes easier. Remember, you long it at the moment. I don't see any reason why it's going down. It's holding. If you don't want to play it, don't play it. At the moment, it's easy to trade SPY because right now the market, the ES is moving about 15, 20 points every now and then daily. So you can at least get $1, $1.50 move on SPYs. You'll have a better range trading SPY. Just wanted to show you guys how it works. I'll keep it to the ES and the NASDAQ for today. The reason is because the Dow Jones, even though I traded, or the US 30, if you want to look at it on the MT5 platform, which is what I'm looking at the moment, it trades a whole lot faster. So I'd rather you guys who are learning futures learn how to trade the ES and the NASDAQ first before you jump into the Dow Jones. It moves a whole lot faster in its range, and you can lose a whole lot more money without wanting to. If we were to look at it on Thinkorswim, it's the same thing. The NASDAQ and the ES, start out as far back as you can on the week. Plot your levels so that you know the top of the channel, you know the bottom of the channel. You have the middle of the channels, and you at least have an idea. The purple line would be the last level of support before it reaches the first bounce. The red at the moment is the top of the channel, which is what it's going to have to break in order for us to be going back on an uptrend for this whole market overall. Until the market breaks this red line, honestly, guys, we're not back into a green market. So most likely what I'm honestly thinking is we might get a rally, we might hold. If we keep getting good news into December, we'll tap these lines right here, and I doubt we're going to break, and I think we're going to go straight right back down, and then to next year just go side to side until the market proves itself. The same thing on the ES. If you see, they're both almost following each other. You get the support levels, set them up, and then you come down into a smaller time frame, 4 hours. And now that you have your levels, you start setting your trend lines and you start looking for place. Remember what I told you guys. Now that you have your levels, short the market right here. Market is on a downtrend. Short along the trend line. You have your lines for a reason. Short the market. The reason I'm saying short the market is because when we looked at it, remember on a weekly, the market's on a downtrend. So why are we trying to bounce the market if the market isn't bouncing? Let the market show you what it wants to do. Always follow the trend line. Just follow the trend. It'll save you a lot of money. Trust me. I've learned a lot from this. So clearly the market's been moving side to side, and now it's attempting a bounce. It wants to bounce. It's bouncing off the bottom of the channel, and it's attempting a bounce, but it's still meeting resistance. Like I said, if on Wednesday we get good news, it'll attempt to bounce. But if we get bad news, guys, watch these levels closely because you could short off these levels right here. There's all this to play with to short the levels back down. Where would it go out to? Remember, you always need your entry and you need your exits. First level that it can bounce back to, 11,400s. If it rejects there too, it can continue down. Rejects there too, it will continue to go down until it has to hold here or bounce back up. But if it holds within the next 2 days, gets good news, we will attempt a leg up to break that 12,000 that it wants to break badly right here. And if we hold there, we will move another leg up. Remember, always look to the left and you'll know where the market's trying to head. It's moving side to side because it's creating, remember, it's soaking in the buyers and it's going up. Same thing on the ES. Have your levels. Set your trend line. Short. Why are we shorting? Remember, the market has to prove itself. At the moment, it's still, every single time it comes to the top or to a level that it needs to break, it's rejecting. So as long as it's rejected, just keep on shorting, short the pops. The thing is that you guys a lot of times want to long the market when the market is not telling you it's time to long it yet. You had a chance to long it, weren't down here. If you had these levels set, you would have known to long it or you would have took the risk. But because now it's on its way up, you want to long it. You can't. You can't do that. You have to wait for it to make a dip. And then you go long. The market trends, always trade the market when it's trending. This is trending down. This isn't trending. This is just, it's consider this a dip. It's a retest. It's testing up here. It failed again, and now it's trending the fuck down. This is still following the trend. We're going down, going down, going down. Why is it going down like this? This is considered like a break. It's like a freaking train. Look how heavy. Look at all that volume. And this is the train breaking. Ooh, breaking, 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 breaking. Soaking buyers, soaking buyers, soaking buyers, soaking buyers. I have enough. Ooh, let's go back up. Retest. Damn, we still can't break this shit. All right, right back down. Why is it going back down? Follow the freaking trend. It didn't break it right here. Why would it break it here? It doesn't have enough volume. Look to the left. It was breaking. And it faked everybody out. Right back down. Look, the second time went down even lower. The same thing. Why? It has to test, it has to break the previous levels. Remember this to the left. So until this breaks these levels, short this motherfucker. The same thing for the ES. Always look to the left. If you're looking for entries, then go into it. Remember, I like the 1 hours. Gets clear. And I also like my favorite entries, honestly, the 15s. This is when I'm going in. But if you're day trading this, it can be hard. Now, if you have your levels, remember, if you were shorting it, you'd be winning all day. You short the pops until the market proves itself, because it's still trending down until we get good news. Does it want to bounce up? It's attempting to bounce up. And we only know that when we zoom out. If you're ever confused about what the market's doing, zoom out and look to the left. It's really hard to just talk about the market and entries. If you guys have very specific questions, just ask me. That way I'll be able to answer it. But this is just more or less how to just entry. Once I get back to my regular computer, I'll be able to show you guys live trades, so you can actually see my entries and things like that. More videos coming soon. For now, enjoy.